Hey guys, it's that Dividend guy coming at you with another list video here today. This one is by US News. It's 10 of the best stocks to buy for 2021. The list of the 10 best stocks for 2021 beat the S&P 500 by 1.7 percentage points in the first quarter. So first, let's take a look at the first option, being Adobe. Arguably one of the most promising and stable businesses on the list, shares of the software giant Adobe nonetheless fell 4.9% in the first quarter. One culprit was raising rates, as the rate on the 10-year Treasury nearly doubled, driven by the improved economic outlook. Higher rates decreased the value of far-away future earnings, where tech stocks tend to disproportionately derive much of their value when it comes to factors Adobe actually has control over. The company continues to excel, posting fiscal first quarter earnings and sales numbers to beat expectations. In the quarter ended March 5th, revenue rose 26% year over year and earnings per share surged 38%, as the company set record highs for Q1 revenue and raised full year guidance on the strength of its Creative Cloud, Document Cloud, and Experience Cloud businesses. Next, we have Spotify. Spotify technology, ticker symbol SPOT. Another victim of the rising rate environment was Spotify, which finished as the worst first quarter performer among the 10 stocks to buy, shedding 14.8%. As only the name on the list not yet consistently profitable, Spotify is naturally one of the riskier names in this bunch. Fourth quarter results for the Swedish company reported in February were negatively impacted by foreign exchange fluctuations, but the underlying business is still going strong, with monthly active users rising 27% year over year to 345 million. Longer term, the company's dominance in the low-margin music streaming industry is less promising than its growing presence in podcasts, where licensing costs are far less. Spotify is also wisely entertaining the live audio businesses with the recent $50 million acquisition of Clubhouse rival Locker Room. Next, we have BJ stock. BJ's Wholesale Club. The thesis on BJ's entertaining 2021 was simple. Consumers were primed to seek out savings in the aftermath of a pandemic that brought the global economic to a brink of collapse. That spelled good news for the wholesale clubs, and all things being equal, BJ was priced dramatically cheaper than Costco's Wholesale Corp. COST stock, trading at roughly one-third of the price-to-earnings ratio of its larger peer, despite more robust same-store sales growth at BJ's, which clocked in at 18.5% in the third quarter. BJ's announced in March that its rapid growth continued in the fourth quarter, with same-store sales up 15.9% and digitally enabled sales up 168%. The perplexing valuation gap between BJ's and larger rival Costco is finally narrowing, with BJ's stock up more than 20% in the first quarter, while high-flying Costco shares declined 6.3%. Next is a definite household name, Walt Disney Corporation, ticker symbol DIS. In one of the fastest major corporate rebrandings in recent memory, Disney's pivot, officially named just before the onset of the pandemic, into streaming content with Disney Plus, couldn't have come at a more opportune time for the shareholders. Although the stock rose just 1.8% in the first quarter, Disney remains a fantastic buy and hold stock for patient long-term investors. Not only did Disney Plus go from 0 to more than 100 million subscribers in the span of just 16 months, but its hard-hit parks experience and product segment, which includes Disney's cruises businesses, is poised for a comeback as the pace of the vaccination picks up and the economy begins to reopen in earnest. Next, we have Facebook stock. There are roughly 4.7 billion internet users on planet Earth. Of those, 3.3 billion actively use one of Facebook's product on a monthly basis. Facebook stock is up 7.8% in the first quarter, remains reasonably valued at roughly 27 times forward earnings, a multiple that seems exceptionally favorable when stacked up against the forward PE of 29 of the wider NASDAQ 100. In the late January earnings report, Facebook announced an additional 25 billion share buyback pre-program that would provide additional support for shares moving forward. There are certainly some speed bumps ahead for Facebook, including potential fallout from data leak affecting 533 million users and looming ad targeting changes from iOS 14. But if past is prolonged, Facebook will remain resilient, and Facebook stock will keep steadily trending higher. Next, we've got Alibaba stock. Alibaba Group, BABA stock, a well-rounded portfolio, should have some geographical diversity among its holdings, and that's no different for the list of best to buy for 2021. Chinese e-commerce behemoth Alibaba Group appeared to be a relatively safe way to gain exposure to Asian economies, blockbuster growth, and belligerent middle class when the year began, but risks facing Baba have grown in the first quarter. The stock is down 2.6 in the first quarter, suffered from the combination of overblown delisting fears and the more reasonable specter of antitrust crackdowns in China. In the fourth quarter, Alibaba revenue jumped 37% year over year, while EPS jumped 21% at just 19 times forward earnings. The risks facing the company are already priced in. Next, we have Lowe's LOW stock, another pick centered on both the macroeconomic outlook and the stock's relative affordability compared to rivals. Lowe's made the cut as the top stock for 2021 due to the red-hot housing market and boom in home improvement spending. Its comparable value proposition next to much larger rival Home Depot HD stock, even after Lowe's stock jumped 18.9% in the first quarter, still stands. Shares trade for 25 times earnings, and the analysts expected roughly 14 EPS growth for the next 5 years, making it far more alluring than HD with its PE of 26 and expected 5-year EPS growth of 8.4%. Growth couldn't go gangbusters forever, but Lowe's is firing on all cylinders now with the U.S. same-store sales growth of 28.6% in the fourth quarter. The company expects to continue gaining market share in 2021. Next, we have NLS stock. Exercise equipment company Newmont was one of the poorer performers among the best stocks list, losing 13.8% in the first quarter after an incredible 2020 in which shares surged 937% on the heels of the pandemic-fueled boost in demand. NLS got off to another hot start in 2021, only to have its Cinderella story interrupted by the fourth quarter results in February. On their face, results were incredible, with net income up 730% year over year and net sales up 82%. While earnings beat expectations, the 82% top-line growth fell short of consensus and guidance for revenue growth between 55 and 75% in the first quarter, confirmed deaccelerating growth trend. To be fair, deaccelerating growth post-pandemic was always a given, and the $470 million still looks like a steal at less than 9 times earnings. Next, we have Sonos, SONO stock. The sleek speaker company Sonos was far and away the best performing stock on this list in the first quarter, soaring 60.2%. Like Lowe's, Sonos was a bet on consumer spending trends that favored some home improvement projects and personal entertainment in a time of widespread work-from-home policies and shutdowns. A strong brand known for sleek wireless home audio solutions and seamless software interface comparable with voice assistants from Amazon.com and Alphabet, Sonos loyal customers have insulated it in a competitive consumer electronics market. Last quarter, net income rose 87%. The company raised its fiscal 2021 guidance for growth and adjusted earnings before income taxes, depreciation, and amortization to range from 80% to 107% from a previous range of 57% to 89%. Next, we have Newmont Corp, NEM stock. Newmont Corp, a valuable stock in its own as a hedge. Gold and copper miner Newmont Corp was somewhat unremarkable in the first quarter, advancing 1.6% upon factoring in dividends. Despite the continuation of heavy stimulus spending, a dovish Federal Reserve, and a planned $2 trillion infrastructure package, the dollar hasn't weakened this year, and gold prices are off about 9% year to date. The price of copper is on the rise, however, up about 16% in the young year. Even if commodities go sideways, Newmont's 94 million ounces of gold reserves and 41 billion copper pounds of reserves and resources make the company a world-class mining operation. To top it off, the shares pay a 3.6% dividend yield. So guys, the best stocks according to the U.S. News are Adobe, Spotify Technology, BJ's Wholesale Club, the Walt Disney Corporation, Facebook, Alibaba, Lowe's, Nautilus, Sonos, and Newport Corp. Honestly, guys, out of these stocks, the ones that I would look into personally, BJ's Wholesale Corp. If it's anything like Costco and at a cheaper price, I personally would look into it. I will. Now, I've never heard of the stock before. Walt Disney is a no-brainer. Facebook is a no-brainer. Alibaba is a no-brainer. Walt Disney is the king of content. Facebook has so many diversified platforms at this point. It's kind of laughable. And Alibaba is the Amazon of China. Lowe's I owned for a while, but they have great dividend history, and given the at home stuff being forced upon people, they're doing a lot of home improvements. So that's a great one as well. But honestly, out of these, I want to look into BJ's Wholesale, to be honest with you. Guys, but that rounds up another list by U.S. News. I did one from Kiplinger a little while back, so I want to keep doing more list videos for you guys because it's interesting to see what these news services pick up on. Like I said, I've never heard of BJ's Wholesale. I haven't heard of Sonos either. So they give you some stocks that are kind of under the radar. Most of the time they talk about Amazon, Facebook, Netflix, these FANG stocks are in the news a lot, but you don't hear a lot about some of these smaller companies. So it's always a cool way to get new stocks on your watch list. So if you guys are interested in any of these stocks or own any of these stocks, let me know in the comments down below. Personally, I don't own any of them, but I have owned Facebook, Walt Disney, and Lowe's in the past, but I definitely would be looking into BJ stock. So with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any updates. I post Monday through Friday updates on my Robinhood dividend portfolio, and I'm trying to get more content out like lists and other portfolio analyzing other investors' portfolios as well. If there's anything that you guys want, dividend-wise, stocks, maybe IPO, stuff like that, let me know. The other thing I was looking into doing is looking at brands, consumer products like Mondelez, Procter & Gamble, Kimberly-Clark, Pepsi, Coca-Cola, Dr. Pepper, and going down those lines of products, just so people get more familiar with what these big brands actually own, because I know there are a lot of people that want to own stuff like Coca-Cola, Pepsi, and stuff like that, but they don't know the umbrella of what they actually own. So I want to do that as well, and just call it like products among the biggest companies or something like that. Or product placement, and just go down the line of the products of these big companies, so people are more informed about what they're buying when they buy something like Pepsi or Coca-Cola or Procter & Gamble, Kimberly-Clark, stuff like that. So with that being said, guys, thank you so much for watching. Remember, I post Monday through Friday, and if you guys want to see more content from me and have ideas for videos, leave them down in the comments below. And like I said, if you own any of these stocks, let me know, and let me know why you own them as well, because like I said, I'm always looking for new stuff on the watch list, and the whole point of this channel is to share my dividend growth, my investing journey, but I also want to look and find new stocks, and videos like this really do help me and other investors find great companies as well. So thank you guys so much for watching. I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.